Welcome, curious minds, to another deep dive. Our mission, as always, is to jump right into some compelling sources, pull out those really key insights, and make sure you come away feeling well-informed, quickly and efficiently. We want to cut through the noise, give you those aha moments without drowning you in info. Today, we're looking at something pretty fascinating, the near future of Bitcoin's price. We've got this, quite bold analysis. It's technically detailed and makes some incredibly specific predictions, along with the reasoning behind them. If you've ever wondered how seasoned market watchers try to read the signs, this is for you.
Exactly. The source here is a really meticulous market analysis. It's from someone with a lot of experience, someone who's clearly spent time dissecting Bitcoin's patterns and technical indicators. It gives us a unique look into one perspective on what might be just around the corner. Based purely on, chart analysis and established market theories, it's a deep dive into one very specific forecast.
Right. And we really need to stress this up front. Our goal here is just to understand this specific viewpoint in what's obviously a very complex market. This isn't about us endorsing it or giving financial advice. Definitely not.
Yeah.
Think of it more like getting a peek inside an analyst's playbook, yeah? Seeing the tools they use, the strategy, how they build their case. It's about understanding the how and the why behind their thinking. Okay, so let's dive in. What's the absolute core claim here? It sounds pretty major.
It is. The analysis basically argues that Bitcoin is in the final stage of its current bull cycle, the climactic part.
The final stage, okay. For anyone watching crypto or even traditional markets, that phrase definitely perks up the ears. What does that actually imply for Bitcoin's future? What kind of shift are we talking about?
Well, it implies a really significant shift. Potentially quite soon, the analysis gets very specific, forecasting a move into a bear market, and it puts a time frame on it. 2025 or 2026.
Wow, okay.
And it's not just predicting a general downturn. It points to a potential quite significant correction. The figure mentioned is $60,000 per Bitcoin in 2026.
60,000 in 2026. That's incredibly specific, especially given how volatile things are. So it's not just a guess. It's calculated based on their indicator.
Exactly. It's based on a confluence of factors they identify.
So why is understanding this potential shift important, even if you're just, say, casually interested in market stuff?
Well, it shows how some analysts try to get ahead of major market moves, right? Instead of just reacting after the fact. It makes you think about the what-ifs, the mechanics of these cycles, before they become the headlines everyone's talking about. It's about understanding the potential foresight involved.
Okay, this is where it gets really interesting then.
Yeah.
The analysis doesn't just throw out a price target. It points to specific technical signals, the things they see as key indicators, signaling a potential selling point, a major pivot. What are those signals?
Right. It really focuses on two main technical levels coming together. First, there's the 1.618 Fibonacci expansion. Now, people familiar with charting know Fibonacci levels are often used to predict where a price move might stop or reverse. The 1.618 is a key one, often seen as a kind of limit.
Okay, the Fibonacci 1.618. Got it. What's the second indicator?
The second is a very important long-term trend line. The analysis describes it as starting way back in 2017.
2017, so it has some history.
Oh yeah, deep history. It apparently cuts through the peaks in 2021 and projects forward to a key point in 2025. Its strength comes from this multi-year relevance, reflecting a long-term market sentiment.
Right.
And here's the kicker. The analysis claims that Bitcoin recently, about 2 weeks before this analysis came out, hit both of these levels at the same time.
Both simultaneously.
Simultaneously.
Yeah.
The price point mentioned was exactly $122,069.
Wow, $122,069.
According to this analyst, hitting both those significant levels together isn't just a small sign. It's presented as a very, very strong sell signal, a powerful convergence.
That really is a powerful confluence. So for someone maybe less into charting, it's like having two totally separate warning systems on a machine.
Yeah, that's a good way to put it.
One measuring, say, a design limit, the Fibonacci, and the other a historical stress, point the trend line. And both flash red at the exact same moment.
Precisely.
It's not just one warning light, it's two telling you a critical peak might have been reached. Kind of like the check engine and low oil lights coming on together. You know it's likely something serious.
That's a great analogy. It suggests a potential top identified by both long-term patterns and mathematical projections lining up. And building on that, the analysis brings in another layer, Elliott wave theory.
Ah, Elliott wave. Heard of it. Seems complex.
It can be, yeah. But the core idea is that markets move in predictable wave patterns driven by psychology. This analysis specifically highlights something called an ending diagonal pattern, sometimes called a rising wedge. It's typically a five-wave structure, 1, 2, 3, 4, 5, that often shows up at the end of a trend right before a reversal.
Okay, a five-wave ending pattern.
And the key point here is the analysis suggests Bitcoin just finished wave 5 of this pattern.
Finished wave 5.
So the theory implies that after completing that final motive wave, especially an ending diagonal, you typically get a significant corrective move in the other direction. The analyst calls it a brand new corrective pattern starting now, which, lines up perfectly with their forecast of a bear market and that $60,000 target. It adds another layer of pattern confirmation.
Right, that adds a whole psychological dimension to the technicals.
Yeah.
But what about people who are maybe a bit more cautious or not trying to perfectly time the absolute top? Does the analysis mention, confirmations?
It does, yeah. For a more conservative approach, it suggests waiting for a clear break of the 50-week simple moving average.
A 50-week moving average. Why that one?
It's a really widely watched indicator, especially by institutions. It represents the average price over roughly a year, so it's a good gauge of the medium to long-term trend. A solid break below it is often seen as a serious shift in momentum.
Okay, wait for the 50-week break, but there's a trade-off there, right?
Absolutely. Waiting for confirmation like that generally gives you a higher probability of being right about the downturn starting. You're letting more evidence come in. But the flip side is you get a lower risk to reward ratio. You definitely won't sell at the very peak. You can't catch the top, as they say.
Right.
You're basically trading that perfect timing for increased certainty. It's a strategic choice.
And that brings us to why these moving averages, like the 50-week or others mentioned 20, 100, 200 period, why are they so popular? The analysis mentions big players, institutions, banks using them.
Yeah, it's kind of fascinating. They're popular partly because they smooth out price noise and help identify trends. But the bigger reason, when almost all the major players, the ones moving huge amounts of money, are all watching the same levels, like the 50-week, those levels themselves become incredibly important. Everyone reacting to the same signal actually reinforces its effect. Their collective action becomes a market driver. It's a bit self-fulfilling.
So it's less about the number itself and more about everyone agreeing it's important.
To a large extent, yes. The concentrated capital reacting to it gives it power. And then there's one more piece they add, something not strictly technical, Bitcoin seasonality.
Seasonality, like patterns based on the time of year.
Exactly. Historical tendencies. The analysis highlights that August and September have statistically been the most bearish months for Bitcoin, historically speaking.
August and September. Interesting. Why might that be?
Well, it doesn't go deep into the why in this source, but often you hear about the summer doldrums in traditional markets too. Maybe lower volume, people on holiday, perhaps some unwinding of positions after the first half of the year. Whatever the reason, this historical pattern adds another data point suggesting conditions could be leaning towards a downturn soon. It's another piece of their puzzle.
Okay, so let's pull this all together. We've got technical patterns suggesting a peak. Specific price levels just hit, acting as sell signals. Elliott wave theory, pointing to a new corrective phase. And even seasonal trends leaning bearish for the coming months.
It feels like a very layered argument. It is. It's a cohesive case being made by this analyst. And it all points towards their core idea. Consider selling before a potential major sell-off really gets going based on these combined signals, trying to be proactive.
Which brings us to the really crucial point here. With all this technical detail, what's the main takeaway for you, the listener? It seems less about this $60K target itself.
Exactly. It's about understanding the method. And it's super important to stress this. The source material itself explicitly says this is not financial advice, not investment advice, not trading advice, nothing like that.
Right. Crucial disclaimer.
It's presented purely as an observation and analysis of market patterns. The analyst is just sharing their interpretation based on their tools and data. They're not telling anyone what to do with their money. That distinction is key.
Totally. So the real value here isn't about acting on this specific prediction. It's about getting a look under the hood, right? Seeing the kinds of tools, the theories, the data points that experienced analysts use to try and make sense of these really complex markets. What stands out to you about how it's all put together? It seems so comprehensive.
It really is. It pulls together things from mathematics like Fibonacci with pattern recognition like Elliott wave, and even historical tendencies like seasonality. It weaves them into a single narrative about where things might go. You see the strategic thinking.
So quick recap then. We explored this analysis predicting a potential Bitcoin bear cycle, maybe hitting 60KD by 2026. We look at the key signals, that 1.618 fib extension, and the long-term trendline meeting at $122,069. We touched on Elliott Wave's ending diagonal suggesting a correction. We talked about using the 50-week moving average for confirmation for a more conservative approach. And we noted the seasonal tendency for August-September to be weaker. It's definitely a complex picture, but hopefully this deep dive gave you the highlights, the signals, the theories, the reasoning behind this particular forecast.
And maybe a final thought for you to consider. How does understanding the methods analysts use, the tools, the patterns, the frameworks, how might that change the way you read financial news or think about economic forecasts you see every day? Even if this specific prediction doesn't play out, understanding the process gives you a different lens, doesn't it? It shows the structured thinking involved in trying to anticipate what's next.
That's a really great point to end on. Thanks for joining us on this deep dive into the very intricate world of market predictions and technical analysis. Keep exploring, keep learning, and keep asking questions about what drives these markets.